So next I'm moving on to Rachel Tideswell. As I mentioned, she's a senior financial crime manager here at Together, and she's going to go through information that's required in order to evidence the plausibility of your application to get a smooth journey with ourselves here at Together. So over to Rachel.
Thanks, Michelle. So yeah, I'm Rachel. I'm responsible for the first line financial crime team here at Together. When Michelle asked me to be part of this webinar today, I was really excited about it. It's really great to be able to provide some context around what we do in terms of the information, etc., and documents that we request, as rather than just saying what we need. It's great to share with you to understand why we need it as well. I do totally understand that FC can be a bit of frustration sometimes in your industry, but hopefully I'm here to provide some context, information and a bit of clarity for you, and hopefully share some useful tips as well on what to look for in terms of protecting your business and also to protect us as well, and to ultimately ensure that we get things right first time for the customer. Again, as you probably are all regulated individuals yourself, and are also subject to money laundering regs. A lot of you may already know a lot of the information that I'm going to share today, but hopefully there might be bits of useful information that you can take away from the session. And if all else fails, you can put a face to what's normally a non-customer facing team, i.e. the financial crime department, obviously here at Together. Albeit there are a number of us, but it's obviously just my face that you've got today. So let me launch in then to what it is we need and why. Can you hear me? Yeah, sorry, I was muted then. So for information around why certain jurisdictions can be classified as high risk, it's quite simple really. So it pretty much derives from deficiencies around certain things to do with money laundering, or controls around tax evasion, bribery and corruption and sanctions. A lot of these factors are determined by industry bodies such as the Financial Action Task Force and also Transparency International. So when we define who is classed as kind of a high risk jurisdiction, it isn't kind of finger in the air we're going to choose. It does actually come from, global industry bodies that can be sometimes government backed or approved by the government. There are a number of factors that can actually influence what kind of determines a country's risk rating, and it tends to be the things that you would probably imagine. So things around sanctions regimes, civil and political instability or unrest is quite a common one. Countries that are at higher risk for funding terrorism as well, or have terrorist organisations on their territories. Obviously, you've probably seen over maybe the last 10 to 15 years, a lot more sanctions in place, due to issues like Al-Qaeda, etc. So a lot of those will be influenced as well. The primary one is deficiencies, obviously, in the anti-money laundering controls. And again, as mentioned earlier, they are normally governed by bodies that determine, how strong or robust a country's money laundering controls are. And again, a significant level of corruption as well. So again, kind of links into with the political instability and also the lack of controls. In terms of a country risk assessment, it's probably quite important to point out that it applies to a number of circumstances and not just residency or nationality. So if part of your application includes some form of high risk element, whether that be the residency, the citizenship, or even things like the place of employment or the source or the origin of funds, then we will probably require that bit more information in the first instance. And as obviously Michelle and David and Hannah have mentioned earlier on in the call, on occasions we do require enhanced due diligence, obviously if there are higher risk elements to the deal. In addition, offshore lending as well is classed as higher risk because they can often be complex structures. Sometimes it can be, a genuine offshore structure, which is absolutely fine. on occasion, you know, there are some secrecy elements to it. It could be for tax purposes, it could be to, you know, disguise or mask the true beneficial owner. So they're ones normally that we might require a little bit more information on. I guess that the main thing that we get asked is why is evidence required? And I know obviously in your industry you'll be aware of why you need to require why we need to request information, sorry. But I think it's probably just to give you a little bit more understanding that, you know, from our legal and regulatory obligations, we need to make sure that we're totally comfortable with the deposit, we're totally comfortable with the funds that are going to be funding the loan, just to obviously ensure that we're meeting those obligations. And I think, you know, feedback that I've seen over the years in the industry where people tend to come unstuck with applications can sometimes be around evidencing funds. So at first instance, it can sometimes appear obvious, you know, I think David referenced before, things like savings. It can, you know, if somebody's got a really good job, you can see funds accruing, etc. Savings probably is the source of funds. But from our perspective, sometimes on the back end, without kind of understanding how that's accrued. So it is income bonuses, for example, over a period of years, or it's the regular monthly income and they earn £10,000 a month, or just a little bit more information around, say, apart from just savings. It's difficult for us to know at first instance. So I'll just give you a little bit about what we would classify constitutes evidence, just to give you some kind of live examples about what we'd expect to make the journey smoother for both you and the customer. So, for example, we get, different sources of deposit, things like the sale of a car or sale of jewellery or gold or high value items, basically. And what we'd normally expect to see in those instances would be some form of receipt or invoice and probably a supporting bank statement. Now, in some instances, a bank statement's great because you can see the funds going in, but if it's a private sale of a high value car, for example, we can't see the reason for the transfer, we can just see the transfer, hence the request for the receipt or the invoice. Again, with the sale of the property, they're quite normally easy to evidence. You would expect it, you know, it's reasonable that someone would have some form of lender or solicitor correspondence. So again, things like that are really helpful for us. Again, employment bonus, pay slips or supported bank statements, which on a lot of applications would kind of be captured anyway, but in certain parts of our criteria, we might not necessarily capture income information. So it might well be that, you know, we just need that, we might need to touch base, even if it's self-funding, for example, we might just need that to support the source of deposit or the source of actually the repayments on the loan. And then again, finally, with savings, I think it's always a difficult one because I know David mentioned before about making sure that the information that we get from day one is as clear or you know, as much as possible that you have at that point. You know, from my perspective and my team's perspective, we absolutely hate it when it gets to the day of funding, as I'm sure you do, and there's been a change of something in the application, and we're all kind of speeding to get that turned over as quickly as possible for our customer. So as much information that you have on day one around, for example, the source of deposit, please obviously share that with us. With the savings element, as I've discussed, savings itself isn't an actual source. There would be something behind the savings. So please provide that on your report on title or your COT so that we've got that information early on in the day. And we can do what we need to do in the background so that it doesn't impact your application or ultimately the completion date. And then moving on to gifted deposits. So again, these are quite popular. We see gifted deposits. You get obviously people wanting to help the family and friends start out in business, which is fantastic. I wish there was someone helping me out with a gifted deposit, but they're absolutely obviously fantastic to get somebody on the ladder and to get them into that, you know, commercial properties, etc. The one thing that we sometimes do struggle with is the information behind a gifted deposit, and getting it right first time for us is really, really important. So we want to ensure that we can effectively review your applications at day one and be as timely as possible. So it's really imperative, and just to stress again, that the information that you give us is right first time or as much as you possibly have, because in some instances you just don't have it, and we totally get that. So we can obviously use that to work together and get to the right decision as quick as possible. In terms of gifted deposits, things that we would require from, especially high risk gifted deposits, would be a signed letter from the donor that confirms their name, address, date of birth, and the relationship with the borrower. Might sound quite simple, but if it is a high risk jurisdiction, it might well be that we conduct background checks and just to make sure there's no politically exposed elements, or it's not coming from a sanctioned individual or a sanctioned entity. So that's the reason we ask for that information. Again, proof of ID, just to make sure that the information we're being given in terms of name, spelling, etc. is correct. Again, confirmation of the source of funds, just like we would do if it was coming from the customer, because of the higher risk element. And then finally as well, and this isn't a given across all gifted deposits, but if there are some higher risk elements, we may request some evidence or documentation to support that. And it may be that we do that during the application process and maybe not at day one. So I would always advise, if you know there's a higher risk element to it, try and get it at day one so that we make the customer journey and the journey for you as smooth as possible. If in doubt, I would always say request it, or the main thing you can do is obviously speak to your account manager as well. They can liaise with us, or they have the skills as well to be able to answer those questions. And I think the final bit of information or kind of tips to share to you today, and it's probably the questions that we ask ourselves, and it's probably more of a common sense approach than it is a financial crime specialism. It's around, does a deposit make sense? And by that, we mean around the customer's profile, for example. So there's a couple of things that we would normally ask ourselves or would look at in the industry. So things like, is the deposit in line with the applicant's financial profile? So is the information you've been given plausible? Could they have plausibly saved X amount of deposit on the income that they're earning? Can you evidence a gradual build-up of funds via a bank statement, etc., to support the information you're being given? In terms of the sale of high-value goods that I mentioned earlier, another question around that is, does it feel like their profile would support those high-value goods? So if you've got somebody on £12,000 a year as a barber that sold a Lamborghini, how did they acquire the Lamborghini? Because most likely when it gets to us, we're going to ask the question. So if you're thinking at this stage, day one, does it make sense, doesn't it? Ask the question. You're not going to be tipping off. You're not going to be, it's just a question we're going to ask down the line. So we definitely say the mantra is that if you're unable to answer the question or you don't understand the scenario, the likelihood is that we don't. So if we ask the question on day one and not a day of funding, then obviously it makes the smoother journey for everybody. Has the source of deposit changed numerous times? So not that this is a red flag on every deposit, because obviously things can change, circumstances can change, life happens, especially in this economic climate. But does it make sense as to why it's changed? Is it kind of, ringing a little bit of alarm bells as to what's going on as to why it's changed? And would it amplify any cause of concern? If it does, and something doesn't seem quite right to you, then please reach out to your account manager. Obviously, we can support in the background as well and liaise with your account manager to ask certain questions and to support you if you have concerns. And then again, is the deposit linked to a high-risk jurisdiction? Can you obtain that evidence to support that? Because we, like I say, most likely would require that. And then again, to kind of summarise, does the overall deposit make sense? And as I said earlier, if not, why not? Because normally that can be an indicator. And what questions can you ask to mitigate concerns that you may have at first instance? And I often say it because, as I mentioned earlier, we're most likely tend to be internal in businesses and we're not really a customer facing team. But asking questions, even though you're subject to money laundering regs, doesn't constitute tipping off. You need to obviously understand the deal that you're submitting and understand your customer and their resources to provide them with that best quality service. So don't be afraid to ask those questions. And again, if you don't understand it, it's very unlikely that we will understand it. So please establish, as much information as you can early on so we can get it right first time.